Hello, everyone, and welcome to day 3 of our Simple Fund 360 Education Week. My name is Norman, training lead here at BGL, and I'll be your host for this session where we're going to be running through a number of pension-related events using Simple Fund 360. Now, this webinar makes up a number of webinars we've been running this week. So we're about the halfway point of this education week. Now, if you look at that list, we've got a whole bunch of topics that we've already covered. And there, our webinar that we're running now is smack down in the middle. Now, if you want to watch these webinars or want to sign up, we do recommend to sign up for these webinars. You will get an email about the recording of these webinars, and you will be able to see a recording of these webinars on our community. And I'll talk a little bit about the community in a little moment. But also with some of these topics do complement this session today. So today, again, we're going to cover a lot about pension-related events and how to process or how to go about tackling them within the software itself. But we've got webinars on ECPI, so exempt pension income. So if you want to learn more on top of this webinar about pensions, we've got that webinar as well. They'll go about actuaries and also how to calculate exempt current pension income. But we've also got a webinar on Friday about T-bars that is closely related to this webinar as well. But definitely all the webinars here are very good and have a lot of information available about how to use Simple Fund 360. Now, before we get into the actual content itself, I do need to do a little housekeeping things. Now, firstly is about questions. If you do have any questions, please send it through to us at any time using the Q&A panel in your Zoom application. We'll be answering questions throughout the session. And I've also brought along the gang from BGL who are going to help me out with answering questions along the way. So we have members from our client, from our support team, from our training team, from our client success team, and even the Simple Fund 360 product team. So we do encourage questions, and we want you all to take advantage of this opportunity where you can learn more and gain better understanding about Simple Fund 360. So please use it, please ask questions. And also at the end of the session, we're going to have next 5 or 10 minutes or last 5 or 10 minutes for any questions that you might have about the software. Also, I did mention before, the webinar is going to be recorded like all the webinars we're running this week, and they'll be available to everybody through the BGL community and also our YouTube channel. Now, if you're not aware of what the BGL community is, it's a site for users such as yourselves to log on to. It's free to use, and it's a forum for you to post threads or post topics to get in touch with other users as well, and also for us to upload recordings of webinars that we've done as well. So head over there. Again, it's free to join and connect. Definitely recommend that you hop on board, just create an account and have a look at the content that we have on there. And again, if you want to watch this webinar again, it will be up in the community within the next day or so. Okay, pensions. As I mentioned, we're going to be covering a number of pension-related processes that you might encounter and how you should really go about it, or how we recommend to go about it in Simple Fund 360. So as you can see there are a fair few of them that we're covering in this session. So we're going to cover a pension commencement. So if you've got a member that needs to start a pension, how do you go about doing it? We've got a commutation. So if there's a person that needs to go back into accumulation, okay, so from pension back into accumulation, and maybe you want to start a new pension from that, or you want to combine pension accounts for a fund, that will be covered under commutations. Next, we've got TRIS to TRIS retirement phase. So we're going to talk about the changes that have occurred since 2017 about the TRIS and how that's now treated, but also the introduction of the TRIS retirement phase. But in that process, we're also going to talk about what if you've got a member that wants to flip between the different types of pensions. So maybe they want to go from TRIS to TRIS retirement phase, or maybe a TRIS to an account-based pension. Okay, how do you process that in the software? Next, we'll cover death benefits as well. So there are a couple of ways of processing death benefits. It's either through a lump sum or whether you want to start the beneficiary receiving a new income stream. So we'll cover both scenarios and how you go about processing that. Now, yes, there are a few topics that we're covering today, but what you're going to find as we're going through them is the workflow for each of these process or events are actually going to be very similar. You're going to find that the step-by-step things that you're going to be doing is very similar. And I know that what we do find from a lot of users around pensions is there's a lot of uncertainty around how to actually properly process these events. So my hope for this session is it does go a long way in terms of, I guess, alleviating that uncertainty that you might have about, finding yourself having to process these events. So what we're going to do today is we're not only going to go around outlining how to actually process these events, but also to give you insight as to why we do the things that we do or why we recommend certain practices in using the software itself. So hopefully it gives you a lot more clarity and a lot more insight as well, and a bit more confidence in using the software to do this. So the first thing that we're going to cover is a pension commencement. Okay, so you've got a member in the super fund. How do you go about starting a pension? Now, listed here are steps that we recommend to follow when you have this event occurring. So firstly, first step is record income and expenses, or record all the transactions prior to the pension commencement. Okay, so you want all the transactions entered in before the member goes into pension, whatever date that is. Underneath that, I've also put the point right back of tax effect accounting. Now, I've put this in smaller text because this doesn't apply to every single fund that you have. I would say vast majority of funds don't use tax effect accounting, so I just added that as a little point under that. But if you have a fund using tax effect accounting, you have to consider writing that back. Now, for tax effect accounting, I will post something in the chat, so hopefully you see that soon. And that is going to be a link in terms of how to write back tax effect accounting. Okay, so there's your first link about how to write back tax effect accounting. Now, the reason that you want to record all the transactions before this event occurs is because these transactions have an impact on the member balance when you're going to be converting that accumulation account into pension. So that's going to affect how much the member can use for their pension, but also has an impact on the preservation components. So what's in preserved, unrestricted, non-preserved, what's in tax-free, or what's in their taxable component for that member balance. Okay, so that's why it's important that you have all those transactions recorded. The second point or second step is create entries to the last day before the pension commencement. Now, the create entries process, what it does is it does all your revaluations and your profit calculations and allocations to members as well. Now, by running the create entries at a particular day, it does all those calculations and set it up for that particular day. Again, like what I mentioned with the first point, the reason that we do this is to ensure that we know exactly on a particular date what that member has in their account. So with that balance, you can decide how much you want to use, or if you want to use all of it, how much is appropriate or entitled for that member to start their pension with. Now, we say the last day before for pension commencement. Now, when you're doing the create entries before an event, there's a couple of ways you can remember what date to pick when you're doing the create entries process. You can either think about the day before the event occurs, or hey, this is the last day this person is in accumulation. That's what I'm going to create entries to. So there's a couple of ways you can go about doing it. Both are correct, but I'll talk about what makes sense to me when I go through the actual process. And lastly is the actual event of processing that that pension commencement. So as you can see there, there's a couple of prerequisites before you actually do the process, and then you go ahead and do the process. So let's see this in action within the software itself. So I'm going to flip over to Simple Fund 360. Now, in your chat, I'm going to also post a link, just a resource that you can use to have with you. It's from our help site, but it's instructions on how to start a pension. Okay. Now, as we went through the steps, the first step, again, was to make sure all the transactions up until the pension is recorded. So if I go from the left-hand menu to accounting and transaction list, takes me to my transaction screen. I've gone ahead and posted transactions there. So that's all the transactions that we have recorded. So let's say that we've recorded all the transactions up until the member starts the pension. The second step was to ensure that we do the create entries. So from the left-hand menu, we go to compliance and period compliance. In our period compliance screen, this is where we create entries. Again, what the create entries does, it does our revaluations of our investments for the fund, okay, which is important to do before we start the pension, and also our allocations to member. Okay, so it will get all those transactions and all those revaluations, calculate the profit or losses for that period before the member starts pension, and allocates it to the members of the fund. And again, important because that way you can actually identify how much the member has in their accounts in the super fund before they start their pension. So with the dates, start date and end date. With the end date, we want to put this 1 day before the member starts the pension. So what makes sense to me is that the member, let's say, starts pension on the 2nd of the 1st, 2020. So I'm going to do create entries 1 day before that, the 1st of the 1st, 2020. And again, we're going to start pension on the 2nd of the 1st, 2020. So we click on create entries, program does its thing, and processes the create entries process. Now we're getting a few questions on revaluation of assets. So the create entries process itself is the function that revalues your assets for you. So if you have any shares or anything like that in the fund, share prices, if you weren't aware, are uploaded into the program. It's free in the program. You get a daily revaluation price for all the shares. So just by running the create entries process, it does all those revaluations for you. And if there's any profits from those revaluations, it will allocate them to the members. So now we've done our create entries process, we can go through the process of converting the member into pension. Now, the actual process of converting a member into pension, from the left-hand menu, we're going into member and we're going into member list. Now, in the member list screen or the list of members, we find the member that we want to convert into pension. So we've got John Jones. We're going to click on John Jones from the list. So we've got his accumulation account. On the right-hand side, we've got a Start New Pension button. So we're going to click on Start New Pension. And we've got the pension wizard. Now, the point of the wizards that we've created is to run down this list and start from the top and answer all the questions as we go. So from the start, we enter in the start date. So again, as I mentioned before, it's going to be the 2nd of the 1st, 2020. We're going to enter in the pension account type. So we're going to say that John is going to start an account-based pension. Is there going to be a reversionary? So we're going to select no, and we're going to confirm that it is John's account that we're starting pension. Once we select John's account, it's also going to give us John's account balance, and that'll be the date as of this date that we've entered as the start date. At the bottom here, we've got the condition of release. So when you're starting a pension, the person needs to satisfy a certain condition, and these are the conditions they need before they can start their pension. So we're going to say that John is over the age of 65. So we're going to say that is why he's able to start a pension. Next is the full balance being used for the pension. So if you only want to use part of his balance to start the pension, you've got that option as well. So you can select no, and then you can actually specify a percentage of his account balance that's going to be used for pension, or whether a specific amount is going to be used for the pension. So we're going to select yes instead. I'm going to say that his full balance is going to be used for this pension. And then when we select yes, we've got the option to cease the accumulation account in case that we believe he's not going to receive any contributions. Maybe he's retired or whatnot. What component is the amount going to be transferred to? So you've got the option to keep the preservation components as preserved, or move everything to unrestricted non-preserved. By default, if you're starting an account-based pension, it will be set to unrestricted non-preserved. So that means that that user has full access to their super fund, but you have the option to specify whether you want it in preserved or unrestricted non-preserved. And finally, you've got some information on transfer balance cap as well. When you're ready, you can click on save, and you've got the option to save and prepare documents. Now, save and prepare documents will give you the option for a letter and a minute that you can print out. Now, what I'll also mention about these letters and minutes is you can actually, if you forget to print them off now, you can always go into our report screen and you'll be able to find those pension commencement letters and minutes from there as well. Now, what we should see here in our member screen is that we have John Jones now as an account-based pension. And now, we've got a few questions about that I've been seeing popping over around actuaries and exempt current pension and actuary percentages. Now, we do cover actuary percentages in our tomorrow session, so definitely attend that or have a look at the recording for that one there. But what I will say, when you're processing pension events and things like that, at this point, you do not need an actuary. You only need an actuary percentage or an exempt pension income percentage at the end of the financial year. Now, you might find alerts and things like that when you're doing the credentials process about the exempt pension income and things like that. You can ignore those. You only need the exempt pension income percentage or the actuary percentage at the end of the financial year. But again, we'll go through a bit more about that through our exempt pension income session, which comes up in tomorrow morning. So have a look out for that. Okay, now let's move over to our next event, which is going to be around commutations. So commutations, if you want to aware, involves stopping a pension and moving the balance from pension into accumulation within SMSF. So people might decide to use computations to revert a pension balance back into accumulation so they can start a new pension. Maybe a person has multiple pensions. They can use computations to move it back into accumulations to start a combined pension. So they've only got one pension account. Or perhaps simply they just want to move back into accumulation. There's a whole bunch of reasons why you might go through this commutation process. But when you have this event occurring, the processes are very much the same. As you can see there, we've got 3 dot points, and they're pretty much identical to the same dot points that we had for the pension commencement. So first one is record the transactions before the events, before the commutation. So you want to make sure you've got the income and the expenses all recorded in your transaction screen before this occurs. Again, exact same reason why we do these processes to understand how much that person has in their accounts. The second step is for create entries. We create entries the day before the event, because with the create entries process, it does our revaluations, but also the allocations of any profits or loss or whatever has occurred to our members. And that way we get an idea exactly on a particular date how much is being allocated or how much that person is entitled to in the fund. And then we process the commutation. So the steps, the prerequisites are exactly the same. And then we go through the process of the commutation. Okay, now we're going to go into the software, back into Simple Fund 360, and we'll run through that process again. Okay, so first step, again, was to ensure that we record all the transactions in the transaction screen. So just to refresh you, in the transaction screen, we can see the transactions have been recorded. Now, we had a question about, do we need to enter all the transactions for the full year, or do we only need the transactions up until the day the member of the event occurs? You don't need the transactions up for the full year to process these events. You only need the transactions up until the day the event actually occurs. Okay, so I just wanted to clarify that as well. So good question there that has been said to me. Now, next we do the create entries process. So from the left-hand menu, we go to compliance and period compliance. Okay. Once we're in the period compliance screen, then we create entries just before the event occurs. So we're going to say that this event occurs on the 2nd of Feb 2020. So what we're going to do is we're going to create entries on the 1st of Feb 2020, one day before the event occurs. Now, a question that we usually have here in some scenarios is, what happens if I've already created entries partway through the year for another event? Should I reverse those entries or should I keep those create entries? Now, our answer to that is best practice is to keep those create entries. The reason why we advise to keep those create entries is because what it does, the first part create entries, is it keeps a check within the super fund to know that an event has occurred partway through the year. So let's say that you go into the fund and you start processing transactions. If you're trying to process a transaction in a period where you've already done create entries, the program will give you a warning message saying, hey, create entries has already occurred. Now, the reason that you do create entries partway through the year is because of one of these events. Usually, you have one of these events occurring, so you've had to know what the member balance is at a particular date to do a certain process. If you have this check in, and if, let's say, somebody posts a transaction in that period, obviously that transaction is going to affect the member balance and in turn affect that event that you've processed. And that's obviously not what you want to occur. What you want is to prevent people from entering transactions in that period, or to actually have some kind of check to stop people from doing that. So that's why we recommend to keep that create entries in the program to avoid people from accidentally entering transactions for a period that you've already finalized or processed. If you do reverse those create entries, it's not the end of the world. That's okay. We've actually got checks in the program, or we've developed the create entries process in a way that it actually can identify those certain sections within the financial year that it needs to calculate a certain balance. So if you have been reversing entries and not keeping them, not the end of the world, but we do recommend to keep those create entries as best practice. So what we're going to do now is we're going to create entries up until the 1st of the 1st, 2020. So 1st of the 2nd, 2020, and we're going to click on create entries. Again, actually I forgot to, I typed in too many letters. Let's do that again. 1st and 2nd, 2020. There we go. Let's create entries. Got the date right this time, and we've got the create entries done. Now, from the left-hand menu, we're going to go ahead and process the actual commutation itself. So from the left-hand menu, we're going to go into member, and member list. Now, once we're in our member list, to process a commutation from the right-hand side, we've got the member transactions options. Now, under member transactions, we've got the internal transfer commutation. Under internal transfer commutation, it'll give us the option to run through a commutation. Now, again, like with the pension commencement, all it is a wizard where you answer questions. Now, the first option is transfer transaction type. Is it a commutation, or is it an internal member transfer? A commutation is moving a balance from pension to accumulation for a member, but internal member transfer is when you're transferring between members. So you're transferring from, let's say, John to Mary. Okay, that's what you would be using an internal member transfer for. So we're going to use the commute option. So we're going to commute a pension account, and we're going to select John Jones. We're going to confirm that it's his pension account that's going to be moved back into accumulation. And then we can enter in the date of the transfer or the commutation. Again, as you can see there, all I'm doing is working my way down the screen and answering questions. Where's the balance going? We're going to move it into an accumulation account for John. And then we answer how much of the balance is going to be moved back into accumulation. We're going to say the entire balance. And finally, when we're happy with it, we can click on save and save only or save and prepare documents. Okay, and then it will give you the option for a letter and a minute. And you can see there now we have John in the member screen with an accumulation balance instead of a pension balance. Okay. Now, what I will say, we've got some questions about T-bar events. Now, when you're doing these processes, if there's any of these events that need to be reported for T-bars, you will see that it creates a T-bar event in your transfer balance dashboard. Okay, now you find the transfer balance dashboard here under the member screen. But if you want to learn more about transfer balance events and how to process them, we do have a session coming up in the next couple of days around transfer balance events and how to prepare those reports. So definitely check that out. Now for our next event is going to be a TRIS to TRIS retirement phase. Okay, so about the TRIS and the TRIS retirement phase, the TRIS events or the account types, the pension account types have been created since 2017. So initially we only had a transition to retirement phase for pensions, but from 2017 they changed how that works, but also introduced a TRIS retirement phase. So from 2017, what they said was for TRIS accounts or transition to retirement accounts, transition to retirement income streams, is that they lose their tax exempt status. So TRISs are going to be taxed at 15%. But as a caveat to that, on top of that, they also introduced a TRIS retirement phase, which is separate from a TRIS, which does have the exempt income attached to it. But on top of that, to be able to become a TRIS retirement phase, you also have to satisfy one of the certain circumstances there. As you can see there, we've got a conditional release of retirement, mental capacity, terminal medical condition, or even a age of 65. Okay, so not only do they have to satisfy the requirements of a TRIS, but they also have to satisfy one of the conditions under a TRIS retirement phase to be satisfied as a TRIS retirement phase. Now, because they've added all these different types of pension types, we've also added a feature in the software to be able to convert a member from a TRIS to a TRIS retirement phase or a TRIS to an account-based pension. And you'll see that through the member screen. Okay, so what I'm going to do is I'm going to head back into Simple Fund 360. Okay, and then we've got the fund there. Now, again, the same steps apply. So I'm not going to go through those again, but we're going to do the change on the 2nd of the 1st, 2020 as well. So, but the same prerequisites do apply. So first, ensure that you record all the transactions up until the event. Secondly, make sure you create entries just before the event occurs, 1 day before, okay? Now I'm sounding like a bit of a broken record there, but the steps are very consistent with all these events. Now, when you're actually processing the event, from the left-hand menu, we go into accounting, member, my apologies, member and member list. Okay, now in the member list screen, we've got Mary. Okay, so we've got Mary Jones set up. I've set them up as a TRIS. And then when we click on convert, we've got the option to convert them to either an account-based pension or a TRIS retirement phase. From those options, I'm going to select TRIS retirement phase. Okay. So under here, we've got the wizard. Again, we've created wizards to make it hopefully a lot easier. All you really have to understand is those prerequisites and then go through the wizard to do the process. And we just run down through the questions. So we go, what is the conversion date? I'm going to say is the 2nd of the 2nd, 2020 in this case. We're going to say conditional release. We're going to say that she hit the age of 65. And then we've got the components for that member. When we're ready, we can click on save, and then we've got the option for save only and also save and prepare documents. And we've got those options for the letter and a minute. Okay. And there we've got Mary as a TRIS retirement phase. So going from the different types of pension accounts that you can have, we've created an actual tool to be able to process that really quickly. Now, again, just to reiterate, the differences between the TRIS or TRIS retirement phase is the normal TRIS has to be taxed at 15%, so they can't get the tax exemption. But with a TRIS retirement phase, you can get the tax exemption, or you can get an actuary or exempt pension income with a TRIS retirement phase. So that's the main difference between a TRIS and a TRIS retirement phase. And what is the difference between a TRIS and an account-based pension? The main difference between those is they both claim exempt pension income, but with a TRIS retirement phase, the thought is the person will still be receiving contributions, because the idea is they're still in a transition to retirement. So they'll be working, receiving contributions, but they'll be able to claim a pension and also claim exempt pension income. Okay, now we're going to go through our last set of events for this session, which is around death benefits. Okay, so death benefits just relates to when a member of the fund passes away. Now, when they have a balance in the fund, there's two ways that you can treat it depending on the events that has occurred. So they can either choose to pay it out as a lump sum or to give it to a beneficiary, and it'll be treated as an income stream. Okay, so you've got those two options there with it, and we'll show you how to process them within the software. So the first event we'll process is a death benefit taken out as a lump sum. It's, again, as you can see, there are 3 steps. They're the same as we've talked about with those other events. So hopefully this is kind of been drilled into your mind, these events. So 1, make sure you record all the transactions up until the date. Secondly, make sure you create entries just before the event occurs. Okay, again, all we're doing here with those two steps is to ensure that we know exactly how much that person has in the fund when we do the event. Now, when we're recording a death benefit or a lump sum, we record this as a lump sum payment within the software. Okay, so back into the fund, what we're going to say is we're going to say that John Jones has passed away, and we're going to say he's passed away on the 2nd of the 2nd, 2020. So we won't worry about having to go through that whole credit entries process again. We'll use the same date, but we're going to do a withdrawal of John's account. Okay, so we're going to remove his account balance and we're going to pay it out as a lump sum. So in the fund, we go into there's a few ways of doing it, but this is the way that I guess I like to do it. I'd like to do it from the transaction screen. So from the left-hand menu, I'm going to go into accounting and I'm going to head over to transaction list. Now, as a guide, it's something for you to read along. I'm going to post a link in the chat, and that'll give you information on how to do lump sums within the software. Okay. Now, to process this, we go to new transaction, and I'm going to process this as a bank statement. Okay, so you can select journal or bank statement. It's really up to you. We're going to date this at the date of this transfer. So we're going to date this as the 2nd of the 2nd, 2020. And then we're going to put in the account code. So the account code for a lump sum payment is the 46000 account. And that's your benefits paid account. Now, if you don't know the number of these accounts, that's okay. Ways that you can look for accounts is either by typing the person's name. So you can type in John Jones, for example, and locate this account that way. Or you can type in transfers out or benefits paid, and you'll be able to find this account as well. So we select John Jones. Now, by selecting John Jones, the program automatically pre-fills the debit field with John Jones' account balance as of this date. So again, that is why it is vitally important that you enter in the correct date. So you enter the correct date, but also do the correct entries before this event. So 1 day before this transaction occurs. Okay. Now, underneath, we've got the details for that payment. So we can go to entering the type of payment, which is a death benefit payment. We can confirm that it is for John, and we can enter details like who the beneficiary is, and also the type of death benefit as well. Now below, you've got the tax components as well. So here you can see you've got the preservation components, taxable components as well. And those will be pre-filled based on the member balance. Again, to ensure that it's correct, make sure you do those prerequisites, enter all the transactions and do the credit entries before the event. Now, when you're ready, you can click on, I'll refresh this screen, kind of froze on me. Okay, we'll do this again. We can click at the bottom of the screen, we can click on save and prepare documents. And save and prepare documents will give us these forms here. Now, once we've done the payment or the lump sum payment, another step that we would have to consider also is for the end date for the member and also a date of death. Now, to enter an end date and a date of death, from the left-hand menu, we go to member and member list. Now for John Jones, if we enter into John Jones's account, so we click on John Jones's account in this case, we can enter in the end date here. So here Generally, you've put in things like the end of the date or the date that he was last in the fund. Now, the importance of this date is that this stops the fund, Simple Fund 360 from allocating anything else to the member. So any other profits or any other tax or revaluations or anything else to the member through the credit entries process. That's what you want to avoid. So once you've locked in the member's account balance and you're happy with it after you've done the credit entries, and maybe you've done the first deathbed benefit payments, once you enter in the date of death, then you don't have to worry about constantly having to create entries for any other payments for this member in the future. So that's another reason why you might decide, or why you need to enter in the end date for this member. So once you enter in the end dates, click on save. Oh, actually, I'll put it in the start date because I put it all in the same date. Okay, but click on save. And we'll save that there. So that ends that member as a member of the fund. So again, you want to enter that end date for that member. Again, it stops anything being allocated to that member. We did have a question that I did see there about what if you do death benefit payments as multiple payments. So maybe you have to split that up into multiple payments. You will do the credit entries in that case up until the member death, or when you need to get the member account for that member. Then once you enter in the end date, that kind of locks in the account balance for that member. So then from then on, when you do your payments, it just takes on what is remaining for that member account, if that makes sense. So you don't have to constantly do credit entries every time you do a payment. Okay, now it's about 12 o'clock. So what we'll do is, I think we'll end it there. There's only a couple of questions left. So what we'll do is, we've got some of the guys typing in. So what we'll do is we'll end the session there. Thanks guys for entering in there. I'll let the guys just finish off answering the questions, but we'll end the session there so no more questions come through. But again, I'd like to thank everybody for attending there. We really do appreciate your time, and hopefully you have got something out of this session. Hopefully it's clarified some of the questions that you might have, and we hope to see you for a future session. So again, thanks, and I hope to see you soon.